Good morning. You're watching the market right here in ET now. Well, we are kickstarting a brand new week, and the trends of 2024 quite intriguing as they may be. Foreign flows, of course, within the emerging market pool, Nikunj, have actually been the highest. Though the seasonality, the earnings season, all of it will kick in this week.
It's not a bad start actually. 2024 was not a bad start, purely if you look at the market from the lens of what happened in the world and what the Indian narrative was. So the week gone by in a sense was again dominated by flows, valuations, but in terms of a specific moot point, flows were decent. The dollar index seems to be inching higher. That is a concern in the world, and 10-year paper has gone higher. So the way I look at the week gone by is that the so-called Santa rally hangover, I think, is over. That was reflected in the way how last week market moved. There was no linear move. We saw the market bias positive, but the market in a sense got two good days, one flat day and one nothing sort of a day. So the market traded with a positive bias. The mood was positive, the momentum declined, and the flows were decent. So 2024, I think in my book, if I just have to analyze the week gone by, it was not bad. The gray area or the fly in the ointment, so to speak, is that the bond year, the 10-year paper is now at 4%. Could that be the big narrative change going forward, and are bears likely to build on that? But for me, the first week was a okay week. Nothing great, nothing bad, nothing excited. Surely the hangover, which was the Santa rally hangover, that hangover is over.
Yep, and even when it comes to individual sectors, that has been in the spotlight. In particular, let's just sum up how the week gone by has been, because while it was minor cuts or consolidation for the frontline indices, it was the broader markets that actually continued to rally. That's a snapshot of Friday's move for the global markets, and you did see quite a bit of consolidation. There was a stronger than expected jobs report as well that came out.
Calling out the sector right also, it was a very gratifying experience. But now I think it's important to get the sector right, of course, but within that sector, I think earnings season will be differentiating the numbers. So for me, this time around, you actually will see differentiation which will start emerging as the earnings season will start rolling. For me, that would be important. Second, I don't see a major fall in the market, but I do expect that the market could move, or Nifty could move in a very tight range, which is on bad days you want to be a buyer, on good days I guess you need to be a seller if you're really a trader. I think this market is likely to settle in a range, and depending on the earnings season, the bias would be decided. The first week the bias was positive. Could the bias change? The bias could change. So in a range bound market, you actually could see the mood point changing from one end to the other end. So I'm not making a case for a collapse. I'm simply making the momentum of January, of February will not move to January, rather than calling out a sector. Oh, defense is going higher, oh, railways is going higher. I think you actually will have to call out the names of the companies now. I'll give you an example here before we go forward. Last year, and I'm using this as just as an anecdote here. Let's look at last year's change in Infosys, and let's look at last year's change in IT. And any guesses? HCL Tech and Infosys, two companies, two reasonable companies, both of them are in top 4. Now that's Infosys for you. Expected. IT mein kuch nahi hua. Now let's look at HCL Tech. बहुत कुछ हुआ, right? So if you got the sector right, it was not a great talking point.
You had to get the stock right.
You had to get the stock right. I think we are moving there yet. Between October and December, it was all about getting the sector right. It didn't matter whether you bought which defense stock you bought, as long as you bought a defense stock. It didn't matter which railway stock or real estate stock you bought. I think that differentiation will start from this earnings season. So the market will trade in a range. Individual names will be called out. The bias, I think, we'll get to know in the next 10 or 15 days. But bear in mind that January has not been a very gratifying month. So it really could be a dull month. To put it in the weather climate, it's going to be chilly for the bulls. And it's going to be foggy, at least for the rest of the people who are not in Delhi.
Yeah, absolutely. Well, it's fogged out in Mumbai as well, not just Delhi. But I think the strategy for the day, and given how the market did after down days as well in the week gone by, did show that amount of resilience, and we did see a bounce back on most days on the latter part of the trading session. I guess, buying at the lower end of the decline could be a possible strategy.
That, I think, is the most prudent strategy, because you're not jumping and preempting the upper move. you actually know that the market is not going to break down. You're buying it on the bad day. That gives you a cushion. That gives you a margin of safety. See, October, November, December, you have to buy high and sell higher. And if you are even buying on gap ups, even if you're buying stocks, if they were 5-7% higher, you miss the rally, you were rewarded. I don't think that is going to work. Now you have to really pick your spots. So again, it's not going to be a month where you have to chase momentum. Let prices come down to you, and then you will have to buy. So it's a very basic approach. I mean, November, December, whatever you bought, as long as you bought, you've made money. It didn't matter what the Nifty level was. Just buy, and next morning sell, and then you see money coming in your bank. ऐसे नहीं होगा.
Yeah. Yep, things are going to be different, so you need to be a little bit more prudent in terms of your stock strategy as we step into the new year. And just going by the kind of FII and data as well that we've got, 5 trading days of January, 3 out of those have seen fairly decent buying, including yesterday's trading day, which saw an FII buy figure of about 1,600 odd crores. But we on the channel have been talking to a lot of market honchos. We want to understand where the markets are headed in the year ahead. Are we looking at a due correction? Is it consolidation? Is the market in a bubble after all? Hear it out from the top market experts.
We are nowhere close to a bubble. You have the entire IT space, right, which is yet to participate in any meaningful manner. You have all the likes of Hindustan Unilever, which is almost at the same price what they were 2 years back, right? I would think that you have, I won't say bubble, but I would think you have seen a lot of frenzy coming into many of the sectors which for the last 7-8 years were not a part of the market at all.
Business cycle momentum will surely continue for another 3-4 years is what I feel. However, markets might have moved a step higher, and there might be a need for that correction consolidation to happen at some point of time this year.
While we've had a stellar CY23, I think CY24 should continue, with that strength, and we should be expecting, strong double-digit returns for the Indian markets in CY24, unless something goes wrong terribly globally.
Okay, let's talk technicals and let's figure out where the market is headed next. We've got Vinay Rajani joining in on the show, Kunal Bothra as well. Gentlemen, hi, both of you. Morning. Vinay, if I could just start off with you. What's the call on the index per se? Some more consolidation, or do you think this time around we could push it a little bit higher as we did attempt in the latter part of last week?
Yeah, good morning, Aisha, and thanks for having me on the show. So last week remained range bound, and 21,800 acted as a strong resistance. And on the downside, we saw that 21,500 is a strong support, and that was the low which was there in the last weekend. If we were to see the candlestick pattern, last week Nifty formed a doji candlestick pattern on the weekly chart. So after a prolonged uptrend, we have witnessed this kind of pattern which shows some indecision in the trend. So some sort of tiredness is there. Some oscillators are also reached the overbought zone. So tiredness is there, lack of momentum is there, but primary trend is still positive. We are advising our clients to hold their Nifty long positions with the strict stop loss of 21,500. Though some indicators are showing some overbought status, but unless we see price breaking important support, we should continue to hold on to the long position. The reason behind that we are asking our clients to hold longs is the strong breadth in the market. Around 92% of the NSE 500 stocks are trading above their 200 days moving average, and mid cap, small caps are actually holding very strong on the charts. So that's the best part of this current trend, and that's why we feel that though there could be some consolidation, though there could be some lack of momentum, but stock specific market will continue to remain bullish. We have entered into a result season now, so there could be a stock specific action and lot of anticipation due to the result announcements. So we believe that benchmark indices will remain in the range, and short term range is 21,500 to 21,800. And overall, we see stock-specific bullishness to continue in the coming days.
All right, let's find out Kunal Bothra's view as well. Morning, Kunal. And just going by what we were discussing earlier this morning, it seems like the trend or the strategy for the year ahead is going to be not individual sectors in which you can necessarily make money, but nail it down to individual stocks, and it's going to be prudent to adopt that strategy for the year ahead. Would you agree, going by what we've witnessed in the first week of Jan?
Yeah, largely looks like, because I think so far over the last couple of days, or maybe one full week for the entire week of Jan, I think we've seen mixed reaction coming across from few sectors. There have been some beaten down sectors, or more often underperforming sectors, which have made a good comeback. The performing ones are the ones where you're seeing some bit of cool off happening. So I believe that the reaction could be a bit mixed. But I think interesting data which has actually emerged on the indices and the index futures, which I wanted to flag off, and one of them particularly is emergence of short covering, rather short built up, as well as covering of long positions for both the indices Nifty as well as Bank Nifty. The other interesting part is walls. The implied walls, they have started to increase for individual stocks. This also could probably be one of the major reasons why you've suddenly seen a sudden bout of volatility which has come back into individual stocks as well as the entire market as such. And the third and the most important factor is there is a lot of confidence brewing from option writers, which is very clearly visible into the Nifty as well as Bank Nifty. For example, on Friday, we saw even 21,700 mark, which is at the money to slight in the money calls, being seeing one of the highest built up in terms of open interest. That itself tells you that the market expectation is to be a bit more tempered from current levels. And if you go by the last few days of price action, it indicates that the month of Jan could be a bit flattish to consolidative.
In light of that, Kunal, let's get in your top trading calls this Monday morning.
So I'll go with a mixed trade over here. The first one is a sell on Escorts. That's a stock which has actually been a huge underperformer. In fact, the stock is significantly below its 50-day moving average and is now just about few percentage points away from its 200-day moving average. So we'll go with a sell on Escorts, expecting a near-term target of 2750, stop loss at 2840. And Poonawalla FinCorp has been one of the stocks which I've been recommending. It made a fresh swing high on Friday, breaking past above the 450 levels. So would suggest a buy with a target of 480, stop loss at 440.
Okay, and Vinay, what about your stock ideas?
So I would be going long in ICICI Bank. It has witnessed a healthy correction from the recent highs and did not participate in the current for last 2 weeks, and it was underperforming. But after reaching some crucial support, it has shown some traction on Friday, and I think ICICI Bank can do well from here. So at 993, one can go long for trading. I would suggest a stop loss of 968. On the upside, 1023 should be the target for next 2-3 session. And the second stock which I like is from the IT space. So IT performed very well on Friday and some sort of recovery was seen. And the stock which I like technically amongst the IT space is the Birla Soft. So Birla Soft can be bought at 714. Stop loss can be kept at 698. On the upside, I'm expecting a target of 742 in couple of sessions. And the third pick I would suggest on the short side is the auto stocks Maruti. So Maruti has been underperforming and entire auto space has been underperforming. So looking at the technical setup and derivative data, I would suggest going short in Maruti January future around 10,070. January future can be shorted. In stop loss can be kept at 10,300 in that position. On the downside, we can expect a target of 9750 in Maruti January future. So 2 longs I would suggest and 1 short in Maruti I would suggest.
Okay, there you have it. That's the strategy coming in from our chartists in terms of individual stock ideas to watch out for in today's trading session. Well, let's get a move on then and chat about individual stocks as well. We've got Sumit here to discuss just that, and let's take a look then at some of the updates and in particular what we've witnessed for a federal bank, Sumit.
Well, there has been an update coming in from RBI. They have asking for a couple of more names when it comes to their MD and CEO extension that was due in September 2024. Now, if you see the past performance of Federal Bank over the last 2 financial years, what we are seeing is the credit growth is pretty much in line with what the street has grown, 20% credit growth that we have seen. The deposit growth is a fair better than what other larger players have reported at around 16%. If you see the company's NPAs, they have come down by around 60 basis points. ROAs have improved. Net interest margin has increased from 3.15 to 3.22%. Net profit has largely tripled in the last 2 financial years. And if you look at the valuations of Federal Bank, they continue to remain cheap. In fact, in the Nifty Bank Index, it is the cheapest private bank, trading at just 1.2 times 12-month forward price to book, while its other larger peers are trading anywhere between 2 to 4 times that 12-month forward price to book. So valuations continue to remain cheaper when it comes to Federal Bank.
Okay, so why are we discussing Federal Bank? The fact that Shyam Srinivasan extension has not come in. Now, markets, they always tend to over-scrutinize the whole view when a current CEO does not get an extension. I think there are 2 ways to look at it. Number one, is it specific to the fact that Shyam Srinivasan extension has not come in? Is it specific to Federal Bank and Shyam, or is it in line with what Reserve Bank of India of late has been doing? Now, Federal Bank had applied for a 1-year extension of Shyam Srinivasan, just 1 year after a great 14-year tenure, and more than 1 year technically would have reached that upper limit of the age. So Reserve Bank of India of late has followed a strategy where they are not giving too many short or less than 18-month kind of a COMD approval. So this is in sync with what first Reserve Bank of India has done. B, let's look at Federal Bank, both in terms of what Sumit mentioned, in terms of how the trajectory has moved. It's a stock which is getting unnoticed. It is simply getting unnoticed largely because of the valuations and the return ratios we've garnered. The first impression that comes to everyone's mind is, okay, Federal Bank means Cochin and South and nothing beyond that. Well, that is changing, and which is something which I think markets are not recognizing and markets are not rewarding. Third, valuations which are cheap, both in terms of relative and absolute basis. And typically, when you have a starting point which is less than 2 times book, when the economy is in upturn, CASA is coming back, when the geographies spread is crossing across, the stocks, they tend to rally. Now, what happens if Reserve Bank, what happens in terms of change of guard? Well, Federal Bank board will have to give 2 new names. It could be outside, it could be internal. There is enough and more internal and external candidate, but that is for the board to decide whom they would like to give it to RBI. I also feel that Shyam has done a great job in terms of managing and creating what really could be called as an A-grade team. And this is a succession planning which was at play, because even if he would have got an extension, it could have been maximum for 1 year, which is September 2025. So as it is, the succession planning would have been done. So I will not read too much into this news, with the point that for me, I think it is in line with what Reserve Bank of India of late has been following, which is that they are not giving 1 year or 18-month kind of an extension. This succession planning is something which Shyam has hinted at they have been doing. The bank is in a good shape, and I don't think there would be nervousness in the market. If at all the stock falls, I think you should be buying the stock because of the valuation appeal and because of the trajectory, the earnings currently the bank has adopted.
Yeah, okay, that's going to be one key stock to look out for. But Sumit, what about Titan's Q3 updates? How's the street reading into those?
Well, it's not only Titan, the entire consumption basket has come out with Q3 updates. Titan, Godrej Consumer, Marico, Kalyan Jewellers, in fact, and Nykaa also. Now, in these numbers, it's Titan and Kalyan Jewellers which have stood out. In fact, in a scenario where there has been sluggishness in the discretionary demand, Titan and Kalyan Jewellers have reported strong growth, 20% plus growth for Titan for the 4th consecutive quarter, while for Kalyan Jewellers, it's 33% plus growth that we have seen, also owing to the lower base when compared to Titan. When it comes to Godrej Consumer and Marico, Godrej Consumer is expected to see a revenue decline in low single digit. Now, in the India business, the numbers are expected to be pretty much in line with what the street was expecting, around mid single digit of growth, but it is because of currency devaluation in the foreign business, we are seeing a consolidated level, we are seeing a degrowth. When it comes to Marico, now the street was expecting a growth of low single digit, but what the company has is expecting from the Q3 updates is the fact that it could there could be a decline, in fact, in the low single digit. Now, one positive factor when it comes to players like Godrej Consumer and Marico is the fact that both the companies could see a margin expansion because of raw material prices decline. And when it comes to Nykaa, if you see, their growth has also been lower than what the street was expecting. Consolidated Q3 growth is expected to be around low 20s. Now, if you see in Q1 and Q2, they have grown at a 20% plus growth rate. When it comes to net sales value, it has been the growth has been led by higher discounting that we have seen, and in fact, management has also gone ahead and said that the apparel industry growth remains sluggish, and the pickup has not been as expected as they were expecting in the festive season. So, not much strong growth trends coming in from consumption companies except for Titan and Kalyan Jewellers.
It's very mixed actually, to be very frank. I mean, whether it is the indication, let's say you got from a Titan, or what we've got from Bajaj Finance, or the indication what we've, let's say, got from Godrej, very, very mixed. I mean, one thing is for sure, the luxury is doing very well, aspiration is doing well, travel is doing very well. But when it comes to the basic necessities, and I think that is where I guess the premiumization, the trade up is not happening. I mean, it's like saying, most of these categories are so deeply penetrated that now what are FMCG companies betting on? They are saying that, look, you need See, from that sabun ka batti, you moved into liquid soap, and from liquid soap, you moved into tablets. I think that is called premiumization. I'm talking about the laundry, market here. I mean, from like the sabun ka batti to wash your clothes, you moved into powder, then you moved into liquid, and now you got tablets which you're using in washing machine. But because what is happening in terms of the premiumization, and because there's a rule slowdown, that uptick is not happening. Small packs are selling more, big packs are not selling more, and the companies in a sense are struggling to take the premiumization up. So the trend is where there is aspiration, when there is a story, where there is whole lifestyle experience, that category continues to do well. The basic necessities, which is sabun, tel, shampoo, all those categories are not doing well.
All right, there you have it. The Q3 updates coming in, and then Federal Bank as well in the spotlight with the Reserve Bank, with what they've asked the Reserve Bank. Thanks so much, Samit, for joining in to give those details. Tell you what, let's slip into a very quick break then right here on the show. We'll discuss all of the newsmakers and top stocks to watch when we return.
Well, on Friday evening, there was a bunch of news that definitely kept everyone on their toes. Stock market regulator SEBI announced guidelines on short selling, banning naked short selling of stocks as well. Ankur is here to help us understand what the move already means, because it's already been in place. But, why this fresh talk about it? Ankur?
Yes, market regulator SEBI has updated the circular on short trade, and why I am using the word updated and not new, because it is already in place, and now SEBI has come up with new provisions in the updated master circular, which has been released on Friday, and in that it has tightened the disclosure norms. So already the short trades were not allowed if it is a naked position. So those provisions were already in place, but now SEBI has tightened the disclosure rules on short selling, and it has said that institutional investors will have to confirm and inform upfront if a particular short trade has to be taken. If you talk about retail investors, they can make the required disclosure by end of the trading hours. Apart from that, the direction is also there that brokers, exchanges are asked to collate this information and make available on the website, so that all the participants can be viewing this data. Remember, short selling was something which has been under question for a long time, because many of the retail participants particularly have complaints that when the market is moving in one direction quickly, sometimes they are trapped in trade, and hence now more disclosure has been added by the market regulator, so that the information is available to all the participants.
I would say that nothing is going to change, nothing has changed.
All right.
The short selling provisions remain same as it is. The only change that one can see apparently is the addition of the fact that intention of short selling has to be disclosed. And if you read SEBI circular today, this provision has been there right from 2007 till now. Only thing is, in the master circular, this provision got missed. So it is only correcting a position which was existing, and it is only a clarification. There is not going to be any change in the short selling that was earlier and what will be going from tomorrow. Absolutely no change. Institutional investors were not permitted to do day trading. They are not permitted to do trading. The only thing that how they can do the short selling was they short sell and borrow the same security from the lending and borrowing platform of stock exchange and deliver. So everybody who is selling at present today has to either square up the position today or deliver the next day, because it is T+1.
All right, that aside, let's also put the spotlight on FMCG companies. They're raising the grammage for the various products as inflation in the country eases on the heels of the recent pileup of FMCG goods with the distributors and retailers. Let's get an Astha who joins in with the details. Astha?
Several fast-moving consumer good companies have recently implemented an increase in their grammage of the products. This move comes after declining raw material prices. Some other significant factors which led to this is stable inflation and a dip in consumer demand. Personal care items and food items have witnessed most of the significant grammage increases, with some instances like chips and biscuit adding as much as 10 grams in their packages. This move has several considerations like drop in the raw material costs provide an opportunity for the manufacturers to offer more in the same price, potentially boosting their competitive edge. Also, this step is temporary depending all the factors mentioned above. Stable inflation minimizes concern cost burden as well. We also contacted several companies like Dabur, HUL and Britannia, but we didn't receive any reply from them.
Okay, let's talk stocks which are going to be active and in focus this morning. And Kunal, I want to pick up on the point of Titan, for instance. Very strong Q3 revenue growth of 22%. You think the stock will continue to move higher?
Yeah, I think it's been a very consistent stock, for Titan, and the way the charts have shaped up in the last, few quarters indicates that the stock has that, capacity to absorb any kind of a short-term correction for itself. So I remember, I think a couple of quarters back, there was some negative update for the stock, and it fell down by a margin of 4-5%. But then the stock went to a V-shaped recovery. So and at current levels, when the trends are quite, stable for the stock, and the news flow is positive, I would believe that the natural reaction for the stock should be on the upside. The stock is at 3,700 approximately, and we look at the 200-day moving average, the 50-day moving average, all of that setup is quite positive for the stock. So we could expect possibly the stock moving up to another 3 or 4% on the upside gradually, and then continue to trend up higher.
Okay, fair enough. Meantime, let's welcome on board Sanjeev Bhasin as well, who joins in on the show. Hi there, Sanjeev. Good to have you. Lots to discuss, but let's begin by getting in your thoughts then as to what exactly the strategy is going to be when it comes to large cap IT. We were just mapping out the one-year returns of individual IT stocks and very diverging moves, for instance, between an HCL Technologies versus an Infosys. How are you looking at identifying some of the winners, in particular within the IT space for the year ahead?
Yeah, good morning. So, Avan, if you recall, HCL Tech has been one of our top pick along with Persistent and LTTS. We still think that combination is going to work excellently. HCL Tech's numbers will be, I think, by far the best we've seen in the large caps. But now we are upgraded Wipro. We think Wipro is going to be a key outperformer in the sense that a large part of their domestic government contracts are going to come online. And they are gaining more and more contracts on that basis. They are very well equipped for that. And I think the negative of Wipro is already getting all priced in. And the underperformance is now going to be an outperformer. So as a disclosure, Wipro has been added in our portfolio. We are very, very optimistic on this stock. HCL Tech and Persistent remain our two topics. But LTTS is the other mid-cap which we are very bullish. On Infosys, TCS, we would wait for more guidance numbers. We know this is going to be a seasonally weak quarter, but I think IT has the leg rooms to add to the index where it has not done because of the large caps underperformance. And if the US soft landing continues and with a rate cut faster than we expected, then that could be positive. On the other hand, if bond yields remain elevated, then there will be a lot of profit booking in the top 7 US stocks, which may have a little ripple effect on Indian large cap IT. So status quo on the stocks, but on the index, but more bullish on HCL Tech and Wipro, which can be a dark horse on the upside.
HCL Tech and Wipro seems to be the stocks that Sanjeev is betting on. Vinay, let's quickly have a chart check as well on HCL Tech as well as Wipro and what your reading is.
Yeah, so I completely agree with the Sanjeev sir because he is bullish on Wipro and some sort of development is also there on the technical charts. If I were to see the long-term charts, monthly and quarterly charts, the Wipro made an swing high in 2000. In the year of 2000, made a high of 350. And in the month of recently, in May 2023, we saw that level acted as a support. So previous swing high acted as a and year 2000 high acted as a strong support for the stock, and stock consolidated after that. And now we have been witnessing some sort of participation and momentum coming back in the stock. So after long underperformance, stock has started performing. Momentum is back in the stock. So I see some developments which was not there previously for last many years. So definitely comparatively also, if you were to compare with the HCL Tech, Infosys and other large cap IT stocks, I'm bullish in the Wipro, and Wipro can be preferred IT bet from here. So stock is trading at 456. I would suggest that one can start investing in the stock. One can accumulate the stock in a SIP way, because this is a big development on the long term chart. So one can think for the bigger gains for the long term horizon. So every dip should be taken as a buying opportunity. Short term support is placed at 430, followed by the level of 412, which happens to be the 200 days moving average. So in the range of 400 to 430, there is a strong support which is derived from the 50 and 200 days moving average. And as I discussed, that long-term setup is quite strong. And after long time, we have seen some consolidation breakout. So definitely every dip should be considered as a buying opportunity. So positionally, I'm bullish. For the traders, I would suggest 430 and 412 as a support for the short term.
Thanks so much for joining in. Good to have you on board. Sanjeev, would like to draw your attention to the kind of Q3 updates we've seen, in particular for the consumption space, the likes of Marico, Nykaa, Adani Wilmar, GCPL. It hasn't been fairly strong. What is this indicative of for the year ahead? Do you believe that we could see some sort of a muted or weak move within the FMCG consumption space?
Yeah, so three things. One, we knew that this was the underlying overall macroeconomic scenario where we saw that despite a very strong wedding season, some of these industries did lag because of the rural effect and so on. I would definitely think that Titan has been the outperformer mainly on the back of the wedding season, the spurt in gold prices. But at 3,800, there is no room of comfort. We have booked out of Godrej Consumer and we are upping our stake in Marico. We think the price performance and the valuation now give us enough comfort on Marico to be an outperformer. We've also upped our stake in Nestle, and we think Nestle will continue to be the outperformer in the FMCG space. As a disclosure, we don't track Nykaa. We are more bullish on the fintechs, like we told you, on Paytm and PB Fintech. But in this space, I think it will be Colgate, Nykaa, Marico, and Nestle, which will continue to be outperformers in the FMCG space.
71% for PB Fintech. Basin साहब, Zomato तो रुकता ही नहीं है, चल रहा है, चल रहा है, चल रहा है, भाग रहा है. What is happening there? I mean, it's now a market cap of almost $15 billion.
Correct. Good morning. So, Nikunj, the undertone remains that some of these stocks were most hated and underowned, and now they are a must in your portfolio, given the longer-term view on what fintech and the basket of home delivery is going to be. And they are innovating very fast in all the verticals which they are doing. We know that there are two players with Swiggy not being listed, and they continue to have a better margin expansion on that. So I think even though the valuations look stretched, this is going to be a relative outperformer. But use this opportunity. I've been telling you from 610, 620 into Paytm. They've undergone whatever crisis they had to as far as the book change. It will take a couple of quarters, but don't miss the woods for the trees. Paytm is definitely headed back into four figures, maybe by the end of this year or next year. And PB Fintech is another stock which you are very bullish on, where I think margins can start to expand and volumes will show a lot of growth over this year.
Kunal, based on last week's price action, what has been the standout large cap stock for you?
Well, I think I was actually looking at the larger cap names. There was few stocks like, for example, ITC made a comeback from the large cap arena. That was a stock which has been an underperformer, made a comeback towards, I think, 470 or 480 plus levels. HUL made a comeback. So from the FMCG pack, there were a lot of large cap names which are making a comeback. No major decisive moves in the likes of Reliance, HDFC Bank, etc., which again brings the same scenario that these larger cap heavy-weighted names, where there's a lot of expectations building up, they are not firing as per most of the expectations. But then there was these odd names which had actually started to spring up higher. L&T, in fact, also, if I'm not wrong, managed to come back towards its fresh 52-week high for itself. So those are the few large cap names which did pretty well, specifically on Friday's trading session.
Bhasin साहब, standout winner for Jan, standout winner for this quarter, standout winner for the year. 3 सवाल, महीने का, क्वार्टर का, साल का. 6 महीना नहीं डालता हूँ, चलिए चौथा हो जाता वो नहीं तो.
तो एक मिड कैप आपको बोलता हूँ, the comeback in Idea should be a blessing in disguise for Indus Tower. They've consolidated, got more acreage from Brookfield, and I think the receivables will now become even faster. And we know that in Indus Tower they have a lion's share of the market. And I think once the receivables are back, this stock on an IRR can give you excellent return. So for this quarter, it will be Indus Tower on the back of results, in the back of positive developments on Idea. SW Solar is my stock for the year. 750 se kam mat bechna. The book is doing extremely well. It's a debt-free company. It has an order inflow of almost 40,000 crore in FY24 with a 24-25 with not a single order from the parent. There is a 12% MEP margin. And I think solar panel and the energy side is extremely good for this stock. So this stock can be an outperformer from here. And third, last but not least, DCB Bank. Read my lips. 15 years of underperformance was too much of an overhang. 0.9 time price to book. Aga Khan putting in more capital at a premium. And look at the peer group of L&T Finance. It's now quoting at double the market cap of what it was. And in the same range of business. So convert that into DCB Bank, but this stock is headed to 250.
Okay, interesting there. And Sanjeev, what's the outlook when it comes to the kind of updates that we've seen within Tata Steel? Their Indian production volumes from the last year have grown about 6.4%. How are you looking at the overall increase, the domestic deliveries, and view on steel demand in particular linked to the stock markets?
Yeah, so Aman, if you actually see in all the steel stocks, Tata Steel has been maybe a slight bit of a laggard. We've seen excellent numbers and movement from sale. We've seen the same in the other ferrous, non-ferrous play like Nalco and NMDC. We continue to be very bullish on Nalco and NMDC. But Tata Steel is now going to be the big elephant which will move. Given that it's the lowest cost producer of steel, not in India and the world, and as debt starts to get reduced, return on equity will improve. The numbers are very impressive, and we know that sooner rather than later there is expectation that China comeback could see another price hike in steel prices. Locally, business is doing extremely well, so we have a buy rating. It's in our portfolio, but from much lower levels, and actually it has underperformed. So I don't rule out 175 in the next bull run. After the market consolidates in Tata Steel, but keep an eye out on Nalco and NMDC. These are still raring to go on the upside.
Interesting report from CLSA. SAR grapes no more, and we are upgrading Sula to a buy 554. We increase our price target for FY24 by 0%, FY25 by FY26 by about estimates by about 4%. We have upgraded it from an outperformer to a buy. Kunal, it's a new kid on the block. Almost like a year of chart formation has already taken place for Sula. It's going back, I think, to its previous high, almost previous high.
I think it's crossed that.
Crossed that.
On Friday specifically, it's crossed that.
Somebody was really buying the stock strongly.
Yeah, very good price volume breakout for the stock. And I was actually intrigued by the reaction on the prices, because this was almost like a 4 or 5 months of literally no price action for Sula Vinayas, because the stock was almost stuck at that 480 mark. I call it stuck because the 50 DMA, the slope of the 50-day moving average, which is the key component which we look out for when we try to assess the trends for the stock, it had gone absolutely flat for the stock. Even the 200-day moving average was, which is again a very recently formed average for the stock, had just started to plateau out as such. And Friday's move actually comes as a bit of a surprise, as well as on the positive side for the stock. It could now start to increase the trend, for the stock in terms of the slope of the averages, both the 50 and the 200 moving average, and could lift off the prices from those stuck range of 480 approximately to a possible range which could now start off maybe at 550 to 580 levels for the stock.
You know, speaking of Sula, actually you have a lot of these alcohol beverage manufacturers that have done quite well in the stock markets in terms of their moves. United Spirits year to date has been a 46% return. United Breweries has done well. Radico Khaitan as well has rewarded investors with a return of nearly 40%. Kunal, any sort of, synchronized move just to talking about these players within the space?
Yeah, I think, so United Spirits was one of the few ones which started to move up at, I think at 890, 900 levels. That was a breakout point. Even though I think after this 200 to 50 point up move for the stock, it's still been a bit of an underperformer as such. Radico has done exceptionally well. I think previous month or in the month of November specifically, the stock had made a fresh high above that 1800 levels. So exceptional move coming out from the entire space. Sula Vinayas was the only stock which was underperforming, and I remember I think Som Distilleries was the other stock which had gone through a bit of a rough patch in the last 1 or 2 months. So these were the only two names which were underperforming. Sula Vinayas has made a comeback, but Som is the other stock which is lagging behind.
Okay, Morgan Stanley, oil, more bullish. Turning more bullish on HPCL, BPCL and Indian Oil Corporation see a 30% upgrade. JP Morgan, Indian oil marketing companies, retail price cut likely, stock still attractive, we upgrade BPCL to overweight and downgrade HPCL to neutral and retain our overweight position on IOCL. Vasim Saab, our brokerage is slightly behind the curve now. Your stocks have already gone up.
Well, what can you say? It's the last hurrah. When you miss the bucket, then you come back. So, not to comment on any of these names, but these are the perfect examples of greed and fear. When they were fearful, you should have been greedy. And now when they are greedy, you should be fearful. On a lighter note, take profits off the table. There is a lot of froth in stocks and sectors which have underperformed or not been in the portfolio, particularly the power, railway, defense, and the OMCs. I still think there is upside in those stocks, but after a little bit of a correction and consolidation, wait for numbers to come. We've had a buy on IOC and BPCL and HPCL from much lower levels. So I think, like I said, Nikunj, these are now brokerage reports which are trying to catch the froth right at the top. So be watchful.
All right, Sandeep Sabharwal, good morning. Thank you for joining us. Vasim Saab, thank you first. Let me first thank you also. Sandeep Sabharwal, good morning. How was the weekend? Kya kara?
Just rested now.
Do you think everybody now needs to rest in this bull market also? It's just been a vibrant bull market. It is better to rest rather than get excited.
Yeah, I would agree with that. Market well, especially on this. I don't believe comfort at this. So I think be careful at this buying it more. It's more rather whether you should be buying. It could be sudden of 50% to buy. Economic outlook.
Sandeep, allow me to come in here. There's a bit of an issue with the audio. Once we fix that, we'll get in your take as well. But in the meantime, Kunal, let's get some chart checks going as well. Just going by what we witnessed on Friday's trading day within the broader end of the market, we did see for the week at least a slight degree of outperformance. The small caps on Friday's trading day managed to gain about 0.6%. Names like a Spark rallied, BEML also did quite well, and Phoenix Mills, for instance. I know the entire real estate pocket was very upbeat, but what's your view on some of these individual stocks?
So Spark, BEML and Phoenix Mills, and in fact many of the other data also indicates that this we are at a point where small caps and mid caps are going through a strong bout of outperformance. Now I'll show a very interesting data. I was looking at the distribution of stocks across the Nifty 50, the Nifty Mid Cap 150, as well as the NSE 500. And in fact, many of the stocks within the Mid Cap 150 and NSE 500 are actually trading below their 50 and their 200 moving averages. So the proportion of stocks is just about a meager 70% to 68% broadly for both of these indices, as compared to Nifty 50, where almost 90% of the stocks are trading above their 50 and the 200-day moving average. So which means that the anticipation that the mid cap is into a froth right now is probably not there, because many of the mid-cap stocks are still trading below their 50 and their 200 moving averages. Talking of specifically these three names which you mentioned, I think BEML is something which looks attractive in terms of the chart setup. The stock has done pretty well for itself. Phoenix Limited, of course, the stock has been into a strong uptick because of how the real estate sector has panned out. I think BEML specifically, the stock also gave a price volume breakout. The previous high for the stock was closer to that 2850 to 2950 mark. Slow mover, but I think even after yesterday's or rather Friday's breakout, it indicates that the stock is now upping its range or hiring the support for itself, where from 2750 odd levels the supports could now be at 2850 2950 range for BEML.
Okay, Shivangi Sarda is well with us on the show. Shivangi, morning. Let's get in your take then, because the Nifty Bank attempted that breakout for the second straight session, taking support around the 20 DMA. What's your view in terms of the reading for the Nifty Bank at the 48,000 mark?
Good morning. Thank you for having me on the show. So we've seen that, at the start of the January series, there has been a good amount of put writers who have made a base. But then again, some sort of profit booking can be seen at the higher zones. Nevertheless, if we talk about the Bank Nifty, there is a crucial level of, 47,333. If it holds above this level, it could see a rise to the recent lifetime high, which is 48,636. But the break of a crucial support would lead to a break of this pattern. So 47,822 would be a crucial support to watch out for an up move towards its recent lifetime high. Now, the concern is that some of the heavyweights like Axis Bank are holding very strong, but then again, stocks like Kotak Bank are causing a little bit of a weakness over here. So overall, there is a mixed bag in the entire banking sector, which needs to be looked out for. Some of the PSU names are holding, and this could act as a little bit of a fuel to the banking index.
Okay, that's the view coming in on some of those individual banking stocks. But there's other stocks that will be in the spotlight, those that could be included in the MSCI indices. They're going to be in focus with the cutoff period for the required criteria between the 18th to the 31st of Jan. The likes of PNB, Jindal Stainless, they could be additions in the Global Standard Index. Let's get in Somit, who joins in with all those details and list of stocks. Somit?
Well, multiple stocks would remain in focus on the back of the MSCI next review that is likely to come in. Now, to decide the stocks that would get included or excluded from the index, the cutoff period would be anywhere between Jan 18 to Jan 31st. The announcement for this is expected to come in on Feb 13th, and the adjustment regarding the inflows and outflows would happen on February 29th. So, stocks that would remain in focus, firstly, based on the current prices, Jindal Stainless, PNB, BHL, NMDC and Oberoi Realty are likely to get included, and flows could be anywhere between 131 to 149 million US dollars in these stocks. Now, if there is a price up move of around 2 to 6% in Alchem Labs, Union Bank, Solar Industries and Prestige Estates, then they could also get included in the MSCI Global Standard Index, and if they get included, the flows could be anywhere between 122 to 127 million US dollars. And if there's an up move of close to 8 to 12% in stocks like Dalmia Bharat, NHPC, GMR Airports and Nykaa, they could well get included in the MSCI Global Standard Index, and flows could be anywhere between 114 to 120 million US dollars. And if at all there's an up move of around 15 to 20% in stocks like Canara Bank, Mankind Pharma, Vodafone Idea and Bosch, then they could also get included, and flows could be anywhere between 110 to 113 million US dollars. Now, one stock that could get excluded if there's a down move of around 3.5%, and that is IGL, and if that happens, then there could be an outflow of close to 113 million US dollars, which is nearly 8.9 times the 20-day average volume. And apart from that, a host of small cap stocks could also be in focus on the back of inclusion in the MSCI small cap index. Few names are IREDA, this is a recently listed entity, Cello, JP Associates, RR Cable and Honasa Consumer. There are multiple other stocks that also one needs to keep an eye out for. Now, inflows in these stocks might not be on the higher side, but they could well get included in the MSCI small cap index going based on the current market prices.
Sandeep, this year in a sense will be an interesting year. Why? Because a lot of startups will go public. Swiggy, FirstCry, Ola, a lot of companies will actually go public. That means that the underlying valuations for a Zomato could change, Policy Bazaar could change. How do you see the reverse working out this time? 2023 was all about markdowns. 2024 could be all about markups.
Actually, if you look at IPO cycle, 2023 was more about IPOs of profit-making companies. Like you can argue about valuation, but largely profit-making companies. So all these companies which you're talking of again are deep loss-making companies. And to that extent, I'm I'm slightly wary that we shouldn't see a redux of what happened when all this Paytm, Policy Bazaar, Nykaa kind of IPOs came out, and then there was a drawdown in those of 50-60% because the valuations at which IPOs are coming these days are not justified by any valuation standards.
Okay, fair enough. Meantime, let's also get in your take then as to how you're looking at the entire OMC space, Sanjeev, owing to the kind of confidence within the brokerage community that it's an overweight rating pretty much across the board. What's your outlook in terms of the earnings outlook, the impact of the retail price cuts, the crude oil price trajectory on OMCs?
The OMCs are very tough to evaluate because they've been totally dealing from any kind of analysis which analysts can do because of the fact that fuel prices are not cut when crude prices or the refining margins fall, and they are not increased on the reverse also. So then it's a very difficult sector to evaluate. Right now, everyone is excited because there is no fuel price cut despite crude being low, and everyone is anticipating good profits to come through, which will happen for this quarter. But what happens nearer to elections if these companies are forced to cut prices by 5 to 10 rupees a litre? The entire story will just go awry at that point of time. So I think at 52-week highs, when if someone who got in early is making good profits, I would say that they should be trimming position rather than getting excited and getting in now.
Hypothetically, had to go short on a stock right now. Which are the stocks you would go short on, where you think the market pricing is completely in a disarray, Sandeep?
I don't do the short thing because I think overall we are still in a bull market with the valuation being extended at this point of time, so there should be correction. I think if shortability was there, I think it would have been many of the new IPOs which are trading at crazy valuation, but obviously you can't short them.
Sandeep, and is that the overall view on the market, like you just highlighted? You are anticipating a correction, and if so, how deep could it be? And more importantly, what would be the trigger? Would the market fall under its own weight, or do you think it'll have to be something external?
Usually it falls under its own weight. The reasons come later that then people try to justify why it's fallen. So I think a 5 to 7% correction, if it comes through, it will be healthy for the markets. If the markets keep on rallying, so let's say in today's situation, you would be holding around 15% cash. So if markets fall 5-7%, I'll be looking more at deploying that money. But if markets rise another 5% from here, I would be looking to increase cash by another 10-15%.
Oh, and where will you deploy that cash when the correction comes in?
I would think that the financials is a space which has somewhat underperformed last year. The anticipation of margin contraction, etc., because of which people are wary. So if in a correction that again even the mid to large cap financials underperform, so I think that will be a good segment to look at. But it all depends on so there are many stocks on the radar. So it depends on which stock falls more and comes into a better valuation zone. Because this year, in my overall view, should be a low return year given the current overall valuation. So then we have to be careful what we are buying.
Well, they got updates on DLF. DLF Primeva, 7,200 crore in south of Gurgaon. This is not like central hub. This is south of Gurgaon, the real Gurgaon.
DLF Privana South. It's not south of
No,
Gurgaon.
it is.
It's in Gurgaon.
It is in Gurgaon. As in, it is not like the heart of Gurgaon.
Yeah.
It is not. It is. I think it is. It's not in the heart of Gurgaon.
It's not phase one.
Exactly.
Yes, for sure.
Exactly.
7,200 crores.
7,200 crores is what they've raised, and that's the kind of comeback we've seen at least in some pockets of India. Especially when it comes to the NCR region, where about a year and a half ago, DLF had another launch, and that also really managed to hit out of the park. And the real estate companies which were on the brink of getting wiped out, they had an existential crisis because of debt. Most of the companies now have debt, and technically they can be net debt free if you just take out, sometimes when they raise capital only for product launches and for just, working cycle. But for real estate companies, Lodha, well, we have no problems in maintaining a ROS of 20%. DLF ROS, we know that is in early 20s. Prestige, look at the kind of comeback it has seen. So real estate per se, the sector may have done well, and we can look at the real estate sector and say, okay, it's a 70% plus appreciation for the real estate sector or the realty index for the year gone by. But the bottom line here is that the sector per se, I think at least the large ones are doing exceedingly well. There used to be a time when real estate used to create wealth effect and the money would come to stock markets. And Sandeep, this time it's different, which is that stock market, the wealth has got created and moving into real estate.
Yeah, that's true. It's the reverse this time, that the cycle of wealth creation outside is leading to this kind of up move in the real estate sector. And someone else also has come out that real estate inventory is very, very low. So now that becomes sort of a challenge for, I would think, RBI also, because when personal loan issues came up, they put restrictions. Now the kind of up move in real estate prices which we are seeing, that also is becomes a risk at some stage. So let's see whether there is some regulatory action at some stage from the Monetary Policy Committee or RBI on this front. Because right now, I think we are reaching a frenzied zone in the kind of buying which is happening in real estate, as people anticipate that prices will keep on going up and they should lock in prices at this point of time.
Look at some of the stocks here. Okay. Shivangi, the real estate stocks last week also, in a sense, were in a momentum groove. Do you think the rally will continue in the month of Jan? If yes, which is your favorite real estate stock?
So recently, one of the most favorite real estate picks would be Godrej Property. We've seen that the stock has been continuously respecting all its key exponential moving average on daily frame. Good amount of volumes have been added on the, from the last two sessions, and it has come out of a long consolidation. So, after breaking its previous high, we've seen that is 2075. We've seen a good run up, and it can be seen, maintaining at its higher zones because follow up is strong over here. So I feel there is still a little amount of steam that is left over here in this stock. So next level that we are looking at is around about 2300 and then 2330 levels. And 2200 would be a crucial support to watch out for over here.
Sandeep, wanted to get in your quick take, going by the kind of growth that we've witnessed in terms of the updates for Nykaa. The beauty and personal care business is likely to see a mid-20 growth in GMVs, saying that the net sales value could grow 20% year on year. Fashion vertical could grow around 40%. What's your outlook on how the stock has fared, given it has been a pretty tumultuous year gone by as well, and what it spells ahead for Nykaa?
So Nykaa, again, the stock price movement from here on depends on the profits, because ultimately growth without profits is very easy, because you keep the prices down, and if you are selling below what others are selling, you can easily sell. The question now is whether they can do improvement in their profitability, and that also on a sustainable basis. So I think that will be the key to watch, and once that trend becomes evident, then the stock can do better. But at this point of time, it's too premature to say that we should be buying this stock.
Sandeep, let's go back to a category which we all know is growing, but it's a category which now has lot of options, and I'm talking about the liquor category. Up until now, it was, a couple of years ago, it used to be only Radico Khaitan and United Spirits. Now you've got a Sula, which has gone public. You've got Tilak Nagar, which is a play on complete gin. You've got GM breweries. You've got just about a sector which has got created with a lot of options depending on what do you like. What is the best way in India, Because if consumption is going to grow, if India per capita is going to grow, alcohol consumption will grow. What is the best bet and best way to bet on this entire mega trend?
I think the best company to bet will always be United Spirits, given the valuation at that point of time, simply because of the fact that it's very tough to evaluate the financial and credibility of financials of many of the smaller companies in this segment, as per what I've analyzed over the last 20 years. So I think it's important for people to realize that and stick with the leader if they want to be in this segment.
I'm just going to shift gears and move to a sector, Shivangi, which in a sense was like the real darling of everyone for the month of December, power. NTPC, or for that matter Tata Power, Niveli Lignite, JSW Energy or stock JSW Power. These stocks did very well in December. What is in store for the big power companies in the month of Jan?
Absolutely, power were absolutely in power in the entire series. Um, we've seen that this entire sector has seen quite a lot of surge in the amount of open interest addition that has happened. But then again, there has been fairly, average rollover over here, which suggests that they are, quite volatile and would be affected by any, news per se. ONGC is one such stock which is looking quite positive. It is traveling in an upward sloping trajectory in the weekly frame. And recently, we've seen that stock has come out of its consolidation. Sort of a triangle breakout can be seen over here. Good amount of follow-up buying is also seen. So this is one stock which looks positive for 225 odd levels. 212 would be an important support to watch out for in this space.
Sandeep, we'll let you go on that note. Thanks as always for joining in. Let's just mark what the pre-open rates are looking like, and pretty quiet right now, although with a marginal positive bias. The key stocks to look out for are going to be definitely Federal Bank, Titan after their Q3 updates, BOB as well, wherein the Q3 deposits have slipped about 0.3%, though the advances have notched up higher by 2.4% on a sequential basis. That and of course Bajaj Auto, the board is going to be meeting today to mull that buyback, much awaited one at that. So that's going to be the other stock in focus, back above 7,000 rupees per share. But let's get in some mid-cap strategies on that note. Kunal, what's in your list?
So it's Biocon which looks attractive. In fact, that's a stock which has managed to move pretty well for itself in the last 1 week, from 240 odd levels to I think Friday's closing around 290 plus mark for itself. So would suggest a buy with 300 as a target, and trailing my stop losses which I've been giving earlier to from 270 to now 284 for Biocon.
Right. Shivangi, what about your mid-cap ideas?
So for mid-cap idea, I have chosen Sula. There has been a lot of discussion left, right, center as well. This stock has, recently come out of its hurdle zone of 535 levels, and we've seen a good amount of price volume surge over here. The good part is that the RSI has started turning, from these levels, and a good Poland plug pattern formation breakout has also been seen over here. So this stock is looking nice for a good up move over here to 575 levels with a stop near 545.
All right. Good to have you on board. Thank you for joining